Just 7 months ago, Phemex Token was trading at a high of $1.66. Today, it sits around 80 cents. That is a massive 50% drop from its all-time high, leaving retail investors staring at a heavily bleeding chart. The underlying mechanics tell a very different story. The token utilizes an aggressive, hard-coded burn mechanism that constantly destroys supply, and it is backed by a massive army of users actively locking up their holdings in staking contracts. Which leaves us with a billion-dollar question. Is the broader market totally mispricing this asset, or is that plummeting chart a legitimate warning sign? To figure that out, we have to look at what the token actually is. PT is an ERC20 token built on Ethereum, designed to serve as the native utility engine for Phemex, a top-tier crypto derivatives exchange handling billions in trading volume. Holding this token gives you a leveraged VIP proxy to the exchange itself. It is a digital asset tied directly to Phemex's actual platform growth and user adoption. The entire value proposition of PT relies on the sheer scale of the Phemex platform. Millions of traders are swapping crypto derivatives daily, generating serious institutional volume. If you hold the token, you get preferential treatment inside that massive ecosystem. Holders get steep discounts on trading fees, exclusive early access to new token launches via their launchpad, and actual voting rights in the Phemex DAO. The smart contract enforces a strict mathematical ceiling of exactly 1 billion tokens. Not a single token more can ever be minted, establishing an absolute limit on the total supply. Then the deflation kicks in. Phemex takes 30% of the revenue generated by its MemeX and Pilot Trading products and uses it to systematically destroy PT. Capping the total supply while engineering constant demand from traders creates a mathematical vacuum. The setup forces the token's theoretical value upward as the available supply vanishes. 30% of revenue from MemeX and Pilot Trading pools centrally. This capital is deployed to aggressively buy back circulating PT tokens. These repurchase tokens are sent to a burn address and permanently destroyed, shrinking the open market supply. Combine that constantly shrinking circulating supply with the fact that over half of existing tokens are locked up in staking contracts, unable to be sold. Mathematically, the available supply is being choked off from both ends. Given these tight supply mechanics, a 50% price crash is a deep structural anomaly. Something else is dragging this down, which brings us back to the contradiction. If tokens are burning and stakers are locking up the rest, why is the price still bleeding out? The answer lies in scheduled token unlocks. Early investors and team members hold large allocations of PT that slowly vest over time. When those scheduled unlock dates hit, a sudden influx of insider tokens floods the market. If early holders decide to take profits, their heavy sell orders completely overwhelm the 30% buyback mechanism. Compounding the problem is where you can actually trade this asset. Almost all the volume is confined to the Phemex platform itself and Uniswap, meaning there is barely any external liquidity to absorb the shock. Excellent tokenomics and real-world utility lose their impact if the asset lacks the deep external market liquidity required to swallow heavy insider dumping. This line chart tracks PET's recent price action. After tumbling from its peak of $1.66, the token is now in a desperate attempt to build a solid support floor, currently bouncing right around 83 cents. Any recovery attempt faces immediate, heavy overhead resistance. Buyers have to chew through a thick wall of sell orders sitting exactly at the 95-cent mark before any real run can start. If the buyers can violently break through that 95-cent barrier, the psychological momentum flips entirely. The next logical target is a rapid trajectory toward the $1 level. Here is the final verdict. Phemex Token is a smartly designed utility asset directly tied to a profitable exchange's real revenue, but the current lack of external liquidity makes an immediate entry far too risky. Keep this asset on your watch list until the worst of the vesting sell pressure completely washes out. If you found this breakdown helpful, hit the like button, subscribe to the channel, and drop a comment below telling us which token you want us to investigate next.